6.7%. On the assumption of a normal monsoon, CPI inflation, now I am giving the projection for the next year. On the assumption of a normal monsoon, CPI inflation is projected at 5.3% for 2023-24, with Q1 at 5%, Q2 at 5.4%, Q3 at 5.4%, and Q4 at 5.6%. The risks are evenly balanced. Headline inflation has moderated with negative momentum in November and December. But the stickiness of core or underlying inflation is a matter of concern. We need to see a decisive moderation in inflation. We have to remain unwavering in our commitment to bring down CPI headline inflation. Thus, monetary policy has to be tailored to ensuring a durable disinflation process. A rate hike of 25 basis points is therefore considered as appropriate at the current juncture. The reduction in the size of the rate hike provides the opportunity to evaluate the effects of the actions taken so far on the inflation outlook and on the economy at large. It also provides elbow room to weigh all incoming data and forecasts to determine appropriate actions and policy stance going forward. Monetary policy will continue to be agile and alert to the moving parts of the inflation trajectory to effectively address the challenges to the economy. I now turn to the liquidity and financial market conditions. As we approach the end of 2022-23, it is worthwhile to recapitulate the key developments on the monetary policy front over the last 1 year. After the onset of the war in Europe, which drastically altered the global inflation dynamics, the global growth inflation dynamics across the world, including India, we have taken a series of steps in the best interest of the Indian economy. We accorded primacy to price stability over growth in April 2022. We instituted a major reform in monetary policy operating procedure through the introduction of the Standing Deposit Facility, that is SDF. We restored the width of the policy corridor to its pre-pandemic level. We raised the repo rate by 40 basis points and the cash reserve ratio by 50 basis points in an off-cycle meeting in May 2022. We shifted the policy stance to focus on withdrawal of accommodation. We continued the rate tightening cycle in every meeting of the MPC thereafter. And we adopted